Thanks for tuning into India Market Close, and you could call it a flat day or you could call it a day of a bit of a recovery as well. Either ways, we're trading fairly flat for the index, but if the intraday of the Nifty were to come about, you will see a bit of not just immediately right now, but from the lows of the day, certainly a pullback that happened, and we may not be at the highs of the day, but still doing okay. Even the Nifty Bank has a similar chart, by the way, wherein it started off and was trading at the low point of the day, and then has inched up. So in some sense, both the indices mirroring each other. The mid caps and the small caps had a slightly more tougher opening, but the recovery has been equally swift as well. So in some sense, any fears around any kind of selling that might have been somebody's imagination about what will happen because of a particular AMC, etc., have all gotten in some sense absorbed. Bring up the heat map up on the screen and show you what's happening at the large cap end of the market. A lot of green, not as much red. Adani Port is sulking, Cipla is down, IndusInd Bank is down. There's a buy report today on IndusInd Bank, but despite that, Reliance Industries, by the way, 2 days on a trot now, is down. It was one of the key losers on Friday. In today's session as well, I would reckon that Reliance Industries is the top point contributor as well. We'll get to that in just a moment. But first, let me just mark the stocks. What's doing well? Power Grid up, Shriram Finance up. There's strength in Mahindra & Mahindra after 2 or 3 days of a pullback, of a downtake. There's a bit of a pullback in M&M in the session today. Sun Pharma has specific news to itself, access to, or rather a possibility of a very large market opening up for it, and therefore that stock is active. But a lot of stocks peppered with that 1.5%, 2% kind of gains. Nothing dramatic on the large cap end at least. But before I give it over to Hersh, just pull up the points contributors as I said, and you will see Reliance right atop that pile, I would reckon, for a second day on a trot now. Nothing dramatic, but still contributing to the downside. So that's as far as the large caps go. The broader end of the spectrum, Hersh, fertilizers taking the chin yet again.
Yes, so fertilizer stocks in focus, but outside of that, there are plenty of other names as well in focus. And let me try and switch to that. Let's try and pull up a few names as we speak. I'll start off with Century. Of course, news trickling in today specifically with regard to Century Textiles. They're going to new land parcel acquired, new project, and therefore positive on that one. Sangvi Movers on the back of a new order win coming through. Route Mobile for tie-up with regard to ticketing services, which they're going to start initiating on WhatsApp. That one has flown away in trade, 14.5% higher. Marico as well, new product launch. And then you have a whole host of holding companies which are massively in focus. Holding companies in focus largely because SEBI introduces special call auctions and no price bands for price discovery of investment holding companies. Pretty much all of these, Bombay Burma, Vardhaman Holding, Kalyani Investments, and you have a whole host of stocks, both the Bajaj holding companies, Maharashtra Scooters and Bajaj Holdings, JSW Holdings, all of them flying away in trade, pretty much all up 5% plus in trade today. Now, they in any case trade at a discount, anything between 40 to 70%. Most holding companies trade at that kind of a discount. Kama Holdings as well up 8.5%. And therefore, this new announcement definitely a positive trigger for some of these stocks. Let's also pull up some other newsmakers. This is of course over the weekend. Prestige Estates new project launch. Best Agro as well up 8.5+%. JSW Energy doing well in trade. You have an Ujjivan Small Finance Bank tweaking its numbers for FY25. The expectations, that one is down 5%. TBO Tech is up 7 on the back of Goldman Sachs. Positive note, pretty much covering some bit of that 24% upside that Goldman Sachs has given it. And Zomato also up another 2%. Positive note coming in from Morgan Stanley. You also have Delta Corp in focus, mind you. The stock has been in focus all through last week and did very well last week, in fact. But some of the expectations from the GST committee meet not materializing, and the stock is down 4.5% on the back of that.
Yep, so a few stocks which have looked iffy as well in the session today. It's even Stevens of sorts. Hemen Kapadia joins in on such a day from KR Choksi Stocks and Securities. Hemen, good afternoon. Thanks for joining in. How are you approaching? Is there a trade on the index or are you sticking to specific stocks, Hemen?
Very good afternoon, Niraj. Thank you for having me on the show. Always a pleasure. I would avoid taking a trade on the index, Niraj. I'll just give you a couple of points why. Okay, we've had a V-shaped recovery, but if you take 21,281 4th June low to 23,667, Niraj, it's 2,386 points. So after a 2,400 point move almost, expecting a big move on the last week of the monthly expiry, the VIX was oversold. That's recovered to 14. So everything seems to suggest that it's prudent to be script specific, I believe. And if one were to take a trade on the index, I think the bank Nifty clearly stands out. And all of in fact, the private sector bank index Niraj has given a breakout. So HDFC is cooled off, but Axis's, the ICICI's, they all look good. So if I were to take a trade on the index, it would be only and only the bank Nifty. Or maybe one can write, we are at what? Around 51,600. I think one can write 51,000 puts also, because I don't think that's coming. But yes, if a breakout has to come in, Niraj, 51,955 is a level. We see at least a 700 point move from there. So I would do the bank Nifty if I were to do the index, Niraj.
Okay, so if it's an index, it's a trade on the bank Nifty. Noted. Hemen, what are the stocks that you're recommending in that sense? Does your stock list have a banking name?
No, stock list doesn't have a banking name, but I have gone for something next to banking and insurance. I have a buy call on ICICI Lombard General Insurance, Niraj. Why? Because we've spent 4.5 months, almost 5 months consolidating. Now we've broken out. We are at all-time highs, Niraj. And we've spent a lot of time doing this, consolidating, dipping, recovering. And listed history, last week, first time we closed about 1735 on the weekly chart. So I believe that's a valid breakout. And we've crossed on the first trading session of the week, we've crossed last week's high. Maybe there could be a minor cool off, but a buy on ICICI Lombard at 1780, stop loss 1750, target 1840. It's a modest target. I believe the markets remain retain their positive hue. We go into 2000. The second stock is, frankly speaking, not much of it's a no-brainer, Niraj. UPL consolidation, rounding bottom, indicator buy, deeply oversold, recovering from a 3.5 year decline, Niraj. So not much to lose over here. Gradual, steady performer upside seems to be on the cards. Buy at 570, stop loss 550, target 610, Niraj.
Very interesting. ICICI Lombard as well as UPL, both of that on Hemen's list. Let's switch focus. Stock of the day. Goldman Sachs initiates coverage with a buy on TBO Tech and highlighted the positives as well as the risks in the business. Risks more important than the positives, of course. And Rucha joins us with the key details on that one. Rucha, take it away.
Goldman Sachs has initiated coverage on TBO Tech with a buy recommendation and a target price which implies a 24% upside. Now the stock has already rallied 20% in today's trade, and the upside from here on indicates a 14% rally to reach the target price. Now let's talk about the company. Now this company is an online B2B travel distribution platform which connects the sellers and the buyers. The shares got listed in just about a month back in May and got listed at a 55% premium to the issue price. Now the company is consistently profitable and the brokerage house expects the free cash flow to be higher than the profits itself. The key positives that could support the stated upside include large addressable market, asset-light model, strong cash generation, and negative working capital.
All right, thanks for that, Rucha. Hemen, just your views with regard to the move today on TBO Tech. Would you wager a trade?
Frankly speaking, Hersh, there isn't too much of data to go on, honestly. It's a relatively new listing, but with the paucity of data, it would be a very limited short-term view. But whatever data we have, it's a gap up, which is a positive. The gap should remain uncovered. That'd be good for the stock. high top, high bottom, above moving averages. I'm not sure about a fresh trade, but it looks good. Further upside seems like a cinch.
Sure, take your point. Himen, I just wanted to quickly also try and take your views with regard to some of the PSU banks and how they're looking on charts. You're seeing the PSU banking index decline around 0.5% or thereabouts. Some bit of pressure coming in there. What's the sense like? What should one do in this market with regard to PSU banks?
Well, it's a dichotomy, frankly speaking, Hersh. The private sector bank index has given a breakout and the PSUs are taking a breather. But they've had a humongous run, Hersh, from that 23rd March COVID low in 2020. The PSU bank index has rallied from 1078 to 8053. It's been a huge multi-bagger. So we've taken a breather. I think I wouldn't say malaise, but if you look at State Bank Hersh, I think that exemplifies what is happening or not happening. We've taken a breather and it's not showing any signs of anything particular. Coming back to the PSU bank index, we need to sustain about 7,700. Otherwise, I think we're going to remain sideways. I don't see too much of weakness coming in though. But when will it give a breakout? We'll have to wait and see. So I would say focus on private sector banks, and if you look at the private sector bank index, Hersh, that looks good. So frankly speaking, I would prefer a private sector bank.
Okay, names? Any names at all?
The easiest one would be a toss-up between ICICI Bank and Axis Bank. HDFC's run up into a resistance. HDFC can be very interesting, Hersh, but I'm not sure it's going to happen in a jiffy. HDFC Bank has been consolidating for 3 years almost. The range is between 1270 and 1725. 3 years, trust me, we've done nothing. Kotak, very similar charts. If and when we take out 1725, HDFC Bank is going to go to 2100. The Bank Nifty is going to go to 55,000 plus. Markets are going to be on a boil. It's not yet happened, but that could be a possibility. So after almost 3 years, I'd wait for the breakout to come in. While the easiest picks would be ICICI, Axis, they've been leading the market consistently, high tops, high bottoms, all-time highs. So it's like, the car is running in the third gear. Might as well sit in it and enjoy the ride.
Also, Himen, the other pocket which is really taking pressure today is the fertilizer pack. What should one do at this point if one were holding or not holding in this particular space?
Frankly speaking,
let's take a break now. Sorry, Himen, please continue.
Okay, yeah. I'd say they moved too fast. Fertilizer stocks traditionally, they normally, or they're like the railway stocks, they move around the budget times. Okay, different times, different era, but they move too fast. The laws of gravity had to catch up soon. So if I were to look at a fact or whatever, I would say wait a bit. If fact goes up from 580 to 1180 Hersh in 3 weeks, it can't sustain. It's not going to sustain. It was harakiri. But yes, having said that, there's going to cool off, stabilize. Some of them have found bases, so I don't think the complete rise is going to get unraveled. But this is too quick. So I'd stay out. I would go for something else, but I wouldn't panic. If you were a chambal or a futures positional holder, I think a stop losses should have got triggered already. Otherwise, wait. There could be further pain before we see stability coming.
I wish some of this advice had gone to some retailers on Thursday's session when everybody was seeing that there is no end to this, thinking that there is no end to this fertilizer rally. But yeah, this is what happens every single time. In fact, on the other side of the break, we'll talk about defense, rather the holding companies, a special discussion with both Himen and Deven Choksi, and some very interesting data, Hersh, that our colleague Chinmay has pulled out about rallies that have always happened in the past with these stocks and the subsequent corrections as well. So much like what's happened to fertilizers. We're not predicting that is what will happen, but important to put that into perspective. Stay tuned, we'll be right back. Back with India Market Close right here on NDTV Profit. Deven Choksi of DR Choksi Investment Managers joins in on the show to talk about the fundamentals of the market as they are visible currently. And you can see a clutch of stocks correcting. We were talking about how the fertilizer stocks have fallen off the cliff. Deven, good afternoon. Thanks for joining in. A word on fertilizers, and what do you make of this subsequent fall down that we're seeing for the last couple of days? Would these be buy the dip, or would these be stay away?
Yeah, Niraj, good afternoon. Well, I think the very reason for which the fertilizer stock goes up at the time of the budget is always to play with the government policy. And I think that is where the expectation mismatch takes place. I believe that amount of the policy expectations every single participants in the marketplace has from the government on different sectors, be it agriculture or agriculture-related sectors like the fertilizer. I think in itself, it creates a volatility. Honestly, I think our experience says that these businesses are difficult to make money if you are a long-term investor on a sustainable basis. These businesses do make money for you when I think during the volatility you play it right. So that's where probably I think our position is. We normally use any sector which is I think predominantly driven by the government policy decision making. We use those sectors largely for the purpose of trading in and trading out. In this case too, I think we largely believe that I think in fertilizer segment per se, I think it's a case where you'll have to experience, I think, what the government wants to implement as policy is concerned before you take any decision. Till that point of time, I think it remains only a trading play as far as we are concerned.
Understood, sir. And sir, just with regard to how they've moved, right, and now how valuations look from a fundamental standpoint, is the margin of safety you feel completely gone? Do you still believe that there is some value left from a long-term perspective?
So two aspects to it again. I think on one side, the pricing front, I think one will have to evaluate whether the fertilizer companies would have the ability to make, I think, higher amount of alpha gain or the delta gain, as you may want to call it as, from the policy mechanism. That is not very clear apparently for any of the fertilizer company at this point of time without going into specific names. On the other side, I think if they must make margin, if they must make money, then possibly I think the input cost. I think whether do we have a control on the input cost? To me, I think anything which is crude oil and crude oil derivative, I think you can't be having a surety about the input cost and the control on that part of it. As long as I think we don't have the complete clarity on the sustainability part of the current pricing front, as far as the inputs are concerned, we don't have much clarity. Yes, I think one narrative which possibly came forward, and that's where most of the fertilizer stocks started moving up, was the GST input tax credit for the gas on the gas pricing. Because of this particular market expectation that the GST's committee council meeting would possibly take into consideration adding all the sectors, I think, where probably gas, aviation, turbine fuel kind of products to come into the GST ambit from the excise ambit. And that's where probably I think the argument was that I think should they happen to become part of the GST category of products, then in such case, I think they would have the advantage of input tax credit, etc. Since this council meeting is over and nothing on the front has come up, probably the market is giving it back again, I think, at the lower level. So not very sure about, I think, whether to play with this kind of policy decisions invariably, which keeps affecting the business of the companies otherwise.
Okay. Now, to the conversation that we really wanted to do today, and that's the holding companies. Now, just look at what's happened to some of the stocks in the session today. They've all gone up in trade, almost without exception. You can see any holding company, you pick up, close your eyes, throw a dart at that list, and that stock would do well. So let's pull up some of those names. Be it Kalyani Investments, Bombay Burma up 19%, Vardhman up 20%. There are, by the way, there's a lot of names, some of which are not even known. For example, Hersh, there's a stock which has SRF as one of the holdings, right? The name being
Kama Holdings.
Kama Holdings. So Kama Holdings is up in trade. There is Rajpalam, which is up in trade. JSW Holdings, Ramco Industries.
The only exception, in fact, Niraj, sorry for interjecting, is EID Parry. because that's a play on Coromandel.
Precisely.
And,
but it's also got a business of its own.
Correct.
In some sense, it's not strictly a holding company, but
Yes.
it has holding company features, yes.
Yes.
So the point, viewers, that we're trying to draw out here is that one, these companies are doing well because SEBI, actually, let's get Devin in on this and they will kind of talk about this ourselves as well. But Devin, what did you make of this SEBI thought process, if you will? I won't call it a decision as yet. And what it could mean for some of these stocks.
So Niraj, as I see it, I think there are two dimensions to this particular thought process of SEBI. On one side, I think many of these holding companies per se, which are unknown in the market, I think they are sitting on an underlying equity, which is held in their portfolio, which is at a significantly large amount of value. And should these holding companies also want to be part of the listed market? In some cases they are, but I think should they want to be part of the listed market, then in such case, I think there is a case for giving them a proper price discovery and its mechanism. That is where I think the role of the SEBI is that currently in the given situation, without naming any particular company or a promoter group's company, I would say that I think if they have to become part of the market framework, then in that case, I think they will not be able to get listed only, or if at all they are listed, I think they will not be able to correct themselves on the pricing front because there would be a circuit mechanism which would be applied. So here, I think the proposal is coming forward that I think through a call option route, I think you discover the price and establish that particular price. So that will probably be, I think, effective way of handling it. Now, the second part of this particular argument is whether this particular price which is discovered is not discovered up till now. Answer is that I think it is already known to people because listed market companies are already traded. And I think based on their percentage holding in the holding companies, you can easily establish this particular price. So people are knowing the value. What is not very clear, and I think that is what I think the argument should be, that why there is a discount of such a significant amount of value between the holding company and the operating company's the valuation. To me, the understanding is very clear. When you look at the global markets players, where the holding company discount stays between 15 to 20% on an average, in India, I think that discount stays anywhere between 35% to 75% kind of average. The very reason for it is that I think Indian promoters, basically, they don't use holding company for any kind of monetization purpose. They use holding company, as the name says, for the holding purpose. So for an investor, this particular thing doesn't mean anything, because when the promoter is not going to take any action in the holding company, whether buy or sell the stock, maybe at some time or a time buy the stocks of the market, but not sell it, then how would an investor of holding company make money out of, minority investor make money out of this particular game is not clear. And that is the reason for which I think this discount prevails. At the same time, whatever the dividend receipt or the corporate benefits that the holding company receives from the operating company's distribution of dividend, etc., their allocation policy is not at all clear to the minority shareholders, because most of the time promoters have not declared the allocation policy of the capital for that purpose. And that is the reason for which I think this discount prevails. So even if SEBI addresses one part, which we talked about, whether the second part also gets addressed, I think is something which remains to be seen. To me, the sustainability is more important on this price discovery. And should that happen, then probably I think it would be a more meaningful outcome of the policy regime that they are talking.
Okay, and before I come to Hemen on some of these stocks as well, just one follow-up here, Devin. There are some stocks wherein the value of the holdings is at a substantial premium to the listed price. And, you know, the price doesn't go up because the price of a stock can only go up as much before which either the additional surveillance measures or some of the other stuff naturally would come about, right? Because it's a technical process of sorts. And therefore, is this price discovery mechanism that SEBI has introduced a good way of getting some of the really undervalued names, not the ones which trade at a standard 50-60% discount, but the ones which are trading even lower? Could there be a method that some of those may come to some bit of parity? And is that one of the reasons why these stocks are excited? Part one of my question is that. Part two, in the past, Devin, we've seen multiple instances of 4 or 5 days of a flurry of activity in holding companies before they die down. And our producer will fire those instances as well. Could this be more of the same based on your answer?
Well, I think anybody's guess on that front, at least on the later part of the question. But I think the first part of the question, say for example, we take name at this point of time just to explain the case, say Rajapalaya Mills, which is basically holding Ramco group of companies. Now, if that is a holding company and if there is discount into that part of it, it is for a reason. Rajapalaya Mills itself, I think, would have a very low floating stock in the market. So either I think the premium or a discount, I think will depend on the floating stock of that particular company. Suppose with a low floating stock, and if somebody has, I think, created a premium position for Rajapalaya Mills because of the underlying assets are likely to move up, then in such case, I think where would they go and sell it to? Because liquidity itself, I think, is a question mark. And other way around argument equally true, that I think if your liquidity is so poor in the counter, then where exactly I think the investor will find those stocks. So I think probably this price discovery mechanism, even though it gets established, which I say in my first argument, even though it gets established, I think there is a good chance that I think the sustainability of this particular price, which is discovered, is questioned because of the low liquidity of the holding company in the marketplace. And I think that would be an interesting proposition. In fact, I think there is a larger question to entire subject as far as the listed companies are concerned in the marketplace. How do you increase the float in the market so that this unreasonable premium, which is right now happening because of the significant amount of liquidity chasing the stocks, I think, which are largely cornered by the promoters. So how would you probably create the liquidity factor into the market so that I think this undue premium or the valuation probably gets addressed? That should be the question going forward. I think we all are waiting for some kind of a mechanism to take place on this front so that I think the significantly large amount of P, 30, 40, 50, 100 kind of Ps, I think they could possibly come to some kind of a rational level eventually, I think, due to this particular factor of lower liquidity.
Well, it's a super interesting conversation. Thanks so much, Himen Bhai. Lots of factors highlighted as part of this conversation on the possibility as to why some of these stocks trade at maybe 50 to even sometimes as high as 70 and 80% discount to the underlying stocks and companies that they hold. Let me switch it over. Himen, talk to us about how you're viewing the developments here from a technical standpoint, especially the way the stocks have moved up, some of these holding companies, and what should you do from a trader perspective?
I think if I were the trader, Hersh, I think somewhere it's in the price. If you look at Adani Holdings, you look at quite a few stocks that you were discussing, Bombay Burma, it's almost at 20%. I mean, I think every stock worth its salt is, except maybe Tata has all moved 10% and more. So the trading cream, I believe, is gone. But if you are looking at it from a slightly longer term point of view, yes, I think something like a Bajaj holding has been in a very linear uptrend for the last 5 years and counting, 4 or 5 years. Something like that would make interesting. But once again, I'm not sure if it makes sense to recommend a trading buy. Yes, longer term point of view, as an investment buy in, I wouldn't say go the whole hog, maybe in an installment system, look for value. I think then some of these stocks would stand out. But the way they've run up, you can't compare fertilizer and holding companies. But if a stock moves 20%, how much more and when? So I'd say take it easy. You're looking for value, looking for investment, wait for a cool off, and then you can sort of start nibbling.
Okay, take it easy. That's what Himen seems to be suggesting. But we are going to slip into a very short break. On the other side, we look into the Adani Group of stocks after the AGM for Adani Enterprises. And of course, we'll talk about the derivative space and many other pockets where conversation is warranted. Stay tuned. Welcome back. You're tuned into India Market Close here on NDTV Profit, and we have Agam standing by as always. It's 3 p.m. and he's standing by to break down the F&O cues for today. Agam, what's the F&O data indicating?
A quiet day of trade. Consolidation continues even as we see the benchmarks move largely in the kind of range that we saw them move last week. The Nifty hasn't moved that much. In fact, as flat as be at around 23,500. Very little change in open interest. Remember that we did see a lot of unwinding last Friday for the Nifty as well as the Bank Nifty. And that's where we are seeing some traction come there as well. So let's take a look at the Bank Nifty too. And that should be up on your screen. That's also flat, but it has seen an addition of around 5.5% in open interest. When it comes to your option market, again, it's subdued cues. We are looking at a lot of writing around the 23,500 calls as well as puts. And when it comes to your overall open interest distribution picture, we continue to keep an eye on the 24,000 call on the lower end, keeping an eye on the 23,300, 400 puts as well. In terms of stocks, again, another mixed year of trade, but more gainers than losers. And we do have advances for Shriram Finance, Chola Finance, as well as Ultratech Cement, looking at longs, shorts for SBI Life and IndusInd Bank and among stocks, which are seeing unwinding in their future space. Short covering for ABFRL and M&M Financial Services. On the whole, it's been a fairly quiet day of trade, a mixed day of trade with the number of losers just a tad lower than the number of gainers.
All right, thanks for that, Agam. Also, Agam, stay with us because our top news for today is Adani Group's AGM, in fact, Adani Enterprises. And can you give us a roundup, Agam, of Adani Group's FY24 financials, if you may?
So the Adani Group has seen several challenges in the last 1.5 years, and not only in many cases has it surpassed these challenges, but it's led to new highs for a lot of the companies. And that has actually been what's been propelling the companies higher, is the kind of numbers that we've seen coming from the group. Now, firstly, to start off with, we're talking about the 40,000 crores that are raised by the company, and that actually takes care of servicing debt over the next couple of years as well. Moving on, even in terms of the way things have panned out with respect to your profitability for the group in FY24, we've seen a whopping 45% growth on a year-on-year basis for its EBITDA, for the group EBITDA, standing at nearly 83,000 crores, and the profitability up as much as 71% on a year-on-year basis at a little bit higher than 40,000 crores. Do remember that a lot of this is also on account of reduced financial costs, and that is very evident in the net to debt to EBITDA ratio, which now stands at 2.2 times as against 3.3 times from a year ago. Even the group cash balance is standing just shy of the 60,000 mark, does provide a significant amount of liquidity going into the new financial year. Moreover, what is also positive is that a whole list of Adani Group companies have a AAA rating on its debt. This would include something like an Ambuja Cement ACC, or for that matter Adani Ports, of course, two of them being Nifty companies as well. So a lot of these factors playing in favor of the entire group. And we also know that Adani Enterprises specifically has laid out 80,000 crores in terms of its capital expenditure. It's going to be a wait and watch as to how this gets deployed over the next year and what that can bring to the bottom line of the group going in.
Okay, thanks so much for that, Agam. Even Bhai, let me switch over to you. Talk to us about what's the sense like from your side on charts when it comes to some of these Adani Group names. Especially, we've seen some movement in some of the stocks today, specifically. What's the sense like?
Hersh, I'm slightly perplexed with Adani Enterprise. Was good, is good, somehow didn't perform, gave a breakout, came back. There's nothing wrong with the stock. I'm still not sure why it hasn't done much. Having said that, about 3350, I think it should do well and quite well. It won't stop before 4,000. The perennial favorite remains Adani Ports, Hersh. I think it's cooled off a bit, but the long-term charts still indicate a lot of positivity. And I believe there's nothing much to lose at this point in time. A dark horse is what you can consider in the fact that Adani Energy has solutions, hasn't done anything much, Harsh. And this has been like this since almost December. So we spent 6 months doing nothing. And if I were to expand the range a bit, 1.5 years in doing nothing. So whenever it takes out this 1243 level, Harsh, I think it would give you, at the risk of sounding overly optimistic, at least 30% markup from there. So looks very interesting, hasn't done much, nothing much to lose. But if I were to punt or take a calculated risk and say this stock can perform, or you can formally wait for a breakout about 1250. Looks very, very interesting. A dark horse, it can turn positive anytime.
Interesting. Devin, you track some of these stocks closely. Usually it is sports enterprises which find favor. As per charts, maybe Adani Energy, and they are also on the cusp of a fundraise. I believe they've made an announcement for doing a 12,000 crore fundraise or maybe less, I don't know, but a large fundraise as well. Any thoughts on this or any of the other group entities?
So per se, Adani Enterprise, I think, looks fairly more convincing. A couple of reasons. On one side, I think you have got certain assets which are now maturing. Say, for example, airport. Airport is one asset, I think, which is part of the portfolio of Adani Enterprise, which is now generating cash. And in the contrary, I think on a daily basis, I think it operates with a negative working capital per se. So to a greater extent, I think this is one particular business which is expected to be monetized sooner than later in the portfolio that they have. The other assets, I think, which they are basically growing, one of them would be the ANIL, that is a new energy, new industry business that they are talking about, wherein the hydrogen would be the main force, and probably I think green hydrogen would be the narrative that they are talking about, which is probably, to my mind, I think 4 or 5 years away from what it should be as far as I think giving those shares in the hands of shareholders of Adani Enterprise, because Adani Enterprise is an incubator company. So it incubates a business and thereafter it gives those shares to the investors, I think, after demerger. So to me, hydrogen could take another 4 or 5 years before which actually becomes, I think, a meaningful kind of a proposition. Then comes the data center business. Probably, I think that is an equally interesting one. They are probably talking about a significantly large amount of data processing activity that they're talking about using the green energy. So that is again, I think, something which maybe it may follow the airport business as far as the demerger is concerned and giving the shares to investors concerned. The other investments that they've acquired, which is cement, still acquiring more, and I think consolidating under one single brand, umbrella brand, that's a game plan, which is what I believe would make, I think, the entire activity much more stronger in the hands of Adani Enterprise. So maybe as a company, it will probably keep giving you some rewards every 2 years. If you plan next 5 to 6 years of journey as an investor in Adani Enterprise, you keep getting, I think, a rewards in form of the demerged entity in your portfolio of a variety of verticals that they are basically incubating at this point of time.
Okay. Adani Enterprises for Devin Choksi, and Eben makes this point about how Adani Energy Solutions could be an interesting play as well. So keep an eye out for that. What else? There is today some gains for some other stocks. So Greenply. Pull up Greenply. We were talking to Century Ply earlier on in the day and on kind of growth that could come in. Greenply has had a bit of a surge here today. Wonder if Century Ply also has moved up, or is it a Greenply specific move? But 6.5% for Greenply in the session today. Century not so much. Okay. Hemen, on the charts first, a Greenply is just starting to surge. It's up 6.5% at the day's highs. Any thoughts here?
Niraj, a formal breakout has come in. Ideally, this would quantify at the end of the month. We still have this whole week to pass by. But we posted a fresh 6-year high, Niraj. Fresh 6-year high as far as Greenply Industries is concerned. Historically, for Greenply, the 307 level has been very interesting. Difficult to surmount, acted resistance and support alternatively. and we've taken that out rather easily. So frankly speaking, we are heading towards 360. 30 will now work as support, but the setup is positive, and it's not that it's just a flash in the pan. We spent around 6 months consolidating between 210 and 280 for this Niraj. So it's a constructive move, 6-year high. Buying fresh would mean unfavorable risk reward ratio because today's low would be a stop loss. But if I had a position, I'd stick to it. 360 is coming. Maybe it might not come in a jiffy, but it comes to 360, and at 360 maybe we'll be talking about all-time high of 400. Looks good. Breakout ticks all technical boxes.
Okay, and so this has got this real estate flavor to it. There is also the other one, which is cement, which has seen some large short positions built up. Deven, before we thank you, any thoughts on cement and anything interesting that you guys have come out with a report with at DR Choksi in the last 15-20 days?
So, Niraj, we continue to remain bullish about the prospects underlying with ACC and Ambuja, largely because of the fact that 2-3 things are happening simultaneously. On one side, they have got the fantastic logistic, which is available through the group company's logistic business, wherein I think they are in a position to move cement for the infrastructure segment, particularly between one end to another, that is East Coast to West Coast, and vice versa. That is important. Fortunately, I think both these companies are a pan-India presence with a stronger brand. So that is also allowing them to possibly acquire the likes of Penna Cement, which they acquired, I think, recently. So that's where we came up with, I think, a note on the subject, wherein we said that given the kind of consolidation in the cement capacity that they're talking about, and talking about increasing the size, I think this would possibly mean that the cement as a play would be, I think, largely driven by the volume going forward. And that will keep the pressure in check as far as, I think, the margins are concerned. That is one point. Second thing, constantly investing through the renewables and putting the energy into forefront is a very, very positive thing, because I think that's where ultimately I think you're going to have the margin protection also at the same time and the business sustaining. And last but not the least, I think the larger part of the portfolio of cement, the way in which it is currently sold versus likely to be sold, wherein I think you are basically creating the cement final structure in which I think you have basically put the ready-to-use material onto the construction side, particularly for the infrastructure projects. That's where I think you are getting higher amount of value addition versus I think the commodity price realization of cement. So strategically, we find ACC Ambuja very well positioned from the point of view of long-term clarity as far as the business is concerned, both from the value addition point of view, capacity as well, at the same time, I think controlling the margins. That's where I think our stand is on this particular subject. Pan-India presence with value addition possibilities.
Okay. Couple of those Adani Group entities is what Deven Choksi speaks about as he likes. In fact, sticking with the theme, at the 32nd annual general meeting of the Adani Group, Chairman Gautam Adani spoke about the Hindenburg allegations and said the attack from the short seller was timed to coincide with the follow-on public offer. Additionally, Adani Group Chairman reiterated his aim to transform Dharavi in the world's largest redevelopment project and highlighted that financials demonstrate stable infrastructure platform businesses. Listen in.
Typical short sellers target gains from a financial markets. This was different. It was a two-sided attack, a vague criticism of our financial standing, and at the same time, an information distortions campaign, dragging us into a political battlefield. The attack was a calculated strike 2 days before the closing of our follow-on public offer, amplified by a segment of vested media. It was designed to defame us, do maximum damage, and erode our hard-earned market value. Visualize the world's largest redevelopment project in Mumbai's Dharavi has been transformed the world's largest slum over the next decade. Not only will this provide dignity of living to its over 1 million residents, but at the same time, this will build an unmatched ecosystem of a sustainable living and innovation in the heart of Mumbai.
Okay, so those are some points from the AGM, and of course multiple other things. By the way, some flashes on your screen. Okay, Triumph Offshore for 440 crores, an acquisition by Swan Energy. That stock comes in focus too. Final set of questions. Devin, before we thank you, you spoke about the Ambuja and the ACC twins. Anything mid-cap before we let you go? Something that you liking, maybe? You're on... Okay, no. Sorry, I lost the first part of your sentence, please.
Yeah. So I think a bunch of stocks, definitely for sure, but I think they are valuation-wise an expensive proposition currently. So we continue to like some of the companies in auto ancillary space, and we believe that I think that is going to be a clear path going forward for them. Few of them, I think, definitely stands into the EMS segment where they are supplying to the railways as well as to the defense, and that is again, I think we like, but at the same time, valuation-wise, not enough amount of comfort. So we continue to hold what we acquired earlier, but still, I think the new buy is something which we are not immediately putting it across. One company which we have continued to like, and I think we would further buy because the market price has corrected, which is Praveg. I think that is one company which is in the leisure travel hospitality business, wherein probably they are adding number of rooms from currently 750 to by the end of this year about 1,000 rooms. And that's where probably with Lakshadweep coming into play as far as I think their operations are concerned in the current financial year. So we believe that I think this is one company which has probably corrected on the price because of I think the financial performance not matching in the quarterly basis. We believe that I think it's a good investment proposition at a corrected price from the long-term point of view.
I think that is what, because I think on the numbers, it kind of Q4 numbers left a bit to be desired. Very high expectations, and somehow they missed delivering out there. So, Devin, what's that? Sorry, just one follow-up there, and I would then love Himen to take Praveg too. And I know we are extending our appointment, Devin Bhai, but just one quick question. Praveg, what are the numbers like estimated, let's say FY 25-26? Because it doubled its revenues from March 22 to March 24. What's next?
So I think from the core number point of view, I think which may change because of the number of properties which they are commissioning in the different parts of the year. So may not be accurate as far as the quarterly numbers are concerned. But what do I believe? I think once they are fully commissioned with all 25 properties for which they have got the mandate in hand, they are talking about reaching the size of 450 to 500 crore top line. And I think if you assume that I think there is around 40% kind of a play on the EBITDA side, then I think you're talking about 180, 200 crore kind of EBITDA eventually from all these 25 properties, the location on which they are operating and will be operating. Some of the locations are extremely interesting locations, like in Lakshadweep, they have got 4 different properties coming up. Now, this is one area in next 3 to 5 years is going to gain significant amount of tourist traffic. And that's where probably the first mover advantage would come to them as I see it. Similarly, I think the Javai in Rajasthan and also in Udaipur that they are creating one. I think there are 2 of them very interesting propositions. I think once again, I think that they're building up. So that is where I think we believe, and even a Dalaj property in this particular Ahmedabad vicinity is again, I think, a significantly important property for them. So each of these properties, I think, which they are commissioning gradually, they are basically having significantly large amount of revenue generating proposition. And that's where probably I think one would like to buy with a long-term view of around 3 years from now, wherein I think you're likely to see not only the size of the revenue getting 3 times, but also I think the profit performance, which will probably expand by 5 to 6 times from the current levels.
All right. Thank you so much, Devin, for taking our time speaking with us. We let you go on that one. Hemin, if I can come to you just with regard to your top BTST ideas, 5 minutes from close, in fact. So, top BTST, please.
Top BTS, Hersh, the top BTST is Ambuja Cements. We're around 660. So buy at 660, stop loss 654, target 672. Risk reward ratio 1:2, 6 rupees stop loss, 12 rupee target. Hersh, BTST.
Oh, that's very interesting because you've spoken so much about ACC Ambuja on this show. So ironic that BTST also is Ambuja. But Hemin, the other pack which is in focus, which we've not really spoken about at least today, but we've spoken plenty through the year, is defense stocks. Those ones are on a roll. Let's pull up something like a Garden Reach, new order win, but that stock is up 6.5%+. Yes, there you go. So on a roll. Hemin, just with regard to charts, some of these defense counters, what's your suggestion, recommendation?
Well, wishful thinking. I wish I could rewind time for the last couple of months and buy it at that level, but they've all shot through the roof, so very difficult to pick and choose something which technically can be justified. So you spoke about GRSE, so Garden Reach Shipbuilders. We are in a small consolidation phase. Nothing much to lose. Further upside about 1900 seems possible. BDL is something which looks interesting, consolidating for the last 6 weeks. This can be a interesting buy. Interesting because we are at 1552. A positional stop loss Hersh comes in at 1300. So I'm not sure if one can keep a 250 point stop loss, but yeah, BDL on a decline makes sense. Breakout about 1660 should take it to 1980. This would probably be the next 3 months sort of a call. So some of them look nice, but virtually everything has run up. So even technically, there is nothing cheap. You have to buy something even more expensive.
Okay. Hey man, we'll leave it at that. Always a pleasure talking to you. No different today. Thanks for taking the time out. All right, 1.5 minutes left for the markets to shut shop. Let's quickly wrap up the markets. We've not done too badly for a clutch of stocks as well. I mean, Hemin highlighted Ambuja. You look at what's happened to a Greenply, a Zomato, and a few others. Everything is perked up in the last few minutes of trade. The Nifty itself holding up about 50 odd points, so not a bad show. I wonder if banks are doing an encore as well. 0.15, but the charts will look eerily similar. And the breadth isn't looking too bad, I must say, because the mid caps and small caps are in the green. All right, bring up the heat map for the Nifty very quickly, and then Hersh will highlight the mid caps and small caps again very quickly. But this is what it looks like. And Hersh, why did you come in? Because the 1 or 2 stocks that I very quickly want to highlight, M&M Power Grid on the gaining side, the losing side, IndusInd and Cipla, both of them have taken it on the chin. What about mid caps?
Yeah, let's pull up the BSE 500, Niraj, and lots of holding companies is what you'll likely see there. Route Mobile on the back of that order win. You'll see Maharashtra Scooters, Bajaj Holdings, Bombay Burma. So you're peppered with all of those. On the losing side, what you're seeing is some bit of fertilizer, which is RCF, 6% odd down. GSFC also part of that list now has disappeared. But what you're also seeing is a PB Fintech, which is taking or under a bit of pressure and has been over the last few weeks at least. And you also see something like a Mapma India and Motilal Oswal taking a bit of pressure there. Rallis also down. But that side peppered with holding companies, Niraj. Let's pull up the sectoral charts also, if we may. Markets have closed. But if we may just pull up the sectoral charts for a wee bit. 1% up on auto, and the media is down 2%. But outside of that, media, of course, a very small component. Metals, PSUs and IT a little bit in the negative. But outside of that, you're seeing good traction in FMCG as well as PSUs. They continue to rule the roost despite PSU banks not doing well.
Yeah, exactly. But on that note, from Hersh and me and the team that put this show together, thanks so much for watching. Stay tuned to NDTV Profit.